In 2022, Warren Buffett spent $4 billion on one company and called it one of the best managed companies in the world. 6 months later, he sold every single share. The company, it makes the chips inside everything, and since he sold, the stock has doubled. Tonight, the board judges the most important company on earth. And the reason Buffett ran is the one number no spreadsheet can hold.
6 legendary methods, one company, and a disagreement that isn't about the business at all. Taiwan's Semiconductor doesn't design chips. It builds them for everyone. Nvidia's accelerators, Apple's iPhones, the silicon in every AI data center this channel has ever put on trial. One company on one island fabricates the leading edge of human technology. Its share of the world's foundry market, 72.3%, and rising. Samsung, the closest competitor, 6.5% and falling. In the race to 2 nanometers, industry reports put TSMC so far ahead the race is effectively over. The numbers are almost embarrassing. $35.9 billion of revenue in a single quarter, up 40%. Gross margin, 66.2% for a manufacturer. Net income up 58%. It beat the top end of its own guidance. And this year, something changed that almost nobody noticed. For the first time in a decade, Apple is no longer the biggest customer. Client A, widely identified as Nvidia, now accounts for 19% of everything TSMC makes. The AI boom isn't just TSMC's tailwind. It is TSMC's landlord. To feed it, TSMC will spend up to $56 billion this year building capacity, and reportedly raise prices every single year through 2029. Customers will pay it. They have nowhere else to go. A monopoly at record margins, growing 30%. So why did the greatest investor alive refuse to own it? Because of where it lives. November 2022. A regulatory filing reveals Berkshire Hathaway has quietly bought 60 million shares, $4.1 billion. Buffett later confirmed, "That was me. That wasn't one of the 2 other guys." 3 months later, 86% of the stake gone. By May, all of it. He held the position less than a year, and at the annual meeting, he explained it in 2 sentences that should hang over this entire episode. Taiwan's Semiconductor is one of the best managed companies and important companies in the world. I don't like its location, and I've reevaluated that. Since those words, the stock has roughly doubled. Was it the worst sale of his career, or the only sane risk decision in this entire story? That is what the board must decide. 6 legendary frameworks reconstructed from their published methods, not the people, the methods. Each scores TSMC from 0 to 10. The spread between them is tonight's real story. The Fisher model goes first, and it is in love. Research productivity, the 2 nanometer lead. Management candor, guidance beaten at the top end. Runway, decades. The scuttlebutt test is unanimous, customers cannot leave. The Fisher framework calls TSMC the finest manufacturing franchise it has ever examined, 9 out of 10. The highest quality mark in this shows history. The Munger model, invert. What is the cost of never owning the one indispensable company? A true monopoly compounding at 30%, at 23 times forward earnings, is exactly the great business fair price trade the method was built for. It scores an 8 and mocks the rest of the board for agonizing. The Druckenmiller framework rides trends until they bend, and AI earnings momentum is not bending. But the tape cracked 7% into earnings. And here the court notes something delicious. The real Druckenmiller's latest filing shows he trimmed his own position. Long, lighter, finger on the door. 6. Then the bears rise. The Graham model does not argue about the multiple. It argues about arithmetic itself. A margin of safety must protect against permanent loss, and the Taiwan scenario cannot be bounded, hedged, or diversified inside the position. A margin of safety cannot be computed against an army. 4. The Marx model asks only, where are we in the cycle? Record margins, record capex. Nvidia, one customer, 19% of revenue. Analyst consensus, roughly 90% buy, 0 sells, when everyone has thought of everything being right is already in the price. 4. And last, the chair that already voted with real money. The Buffett framework scores the business a 10, the widest moat this board has ever graded. But the method now carries a filter its author wrote in 2023 in dollars. I don't like its location. Business 10, location veto, 5. And his latest filing this quarter, still, 0 shares. Now the second lens, what the smartest living money is actually doing from filings, not opinions. David Tepper added, 1.3 million shares, nearly $500 million. Druckenmiller and Loeb trimmed. Buffett, 0. Of 15 titans this show tracks, exactly 4 hold it. The smartest money in the world cannot agree either. Third lens, the crowd. TSMC's public attention runs at nearly twice its own industry's average, in a sector that is already the hottest on Earth. Analyst price targets cluster between 450 and 490. 0 sell ratings. The crowd has decided. Remember what the Marx model said about that. The board's verdict: Fisher 9, Munger 8, Druckenmiller 6, Buffett 5, Graham 4, Marx 4. Composite 6.0 on the highest quality consensus this board has ever produced, a 5-point spread. And notice, not one of those numbers disagrees about the business. They disagree about an island. July 16th, this company reports earnings. Guidance says 39 to 40 billion. Watch 2 things, whether the 66% margin holds and whether anyone on the call dares to ask the question Buffett already answered with his wallet.
Here's what I take from the board. Every method agrees this is the best business we have ever judged, and the board still couldn't clear a 6. Because TSMC isn't priced like a company. It's priced like a bet that history stays quiet. The company knows it too. 30% of its most advanced capacity is moving to Arizona. Watch that number. It's the only one that can change Graham's vote. Not financial advice. The board's methods are reconstructions, and the score is the start of your homework, not the end. Next week on the Playbook, the board meets the machine that says it can replace them. Subscribe and take your seat at the table.